In this video, we're going to be breaking down the 7 habits of highly ineffective capital raisers. Okay, so let's break all these down. So we're going to go through 1 right through to 7. And the reason I do this is to basically highlight some of the basic mistakes that founders will make as they're going to a capital raise. Some of those are process-based and some of those are attitude-based. And for me, I'm probably guilty of nearly all of these, and I'm sure that you are as well. Now, the idea behind this is to not call out anyone or anything like that. It's more about to understand some of the things that you may be doing that are either turning investors off or they're not being effective for you going with your capital raise as you move forward. So let's break down the 7 habits of highly ineffective capital raisers. Okay, so the first one is being overconfident. Now, I understand that we need to be confident as we're going to a capital raise. We need to build up our confidence as we're going into the process, because when you're going to be rejected a lot, you need to have a good, healthy, let's say, self-esteem to go through the process. But there's a difference when it comes to overconfidence, where people are acting like their capital raising's already done and they've got no revenue and they've never started, right? Or they're acting like every single conversation they have with someone is going to be a potential investor just because they expressed interest. Or they're acting like they're basically a multinational corporation, even though they're still right at the early stages of actually building a business. Raising capital is super hard. Building a business is incredibly hard. Being successful is also incredibly hard. This industry is high risk, high failure. Make sure that you are super aware and humble to that fact. If you are going into your capital raise absolutely overconfident, it is going to be a turnoff for investors, and it's going to be a turnoff for people that are dealing with you. Now, just so you know, this industry is very, very polite. So they may accept it, they may nod politely, but I can assure you they may not want to deal with you going forward. So being overconfident is a great way to show that you are going to be ineffective in your capital raise going forward. Okay, so that's the first habit. Second habit is selling the product, not the opportunity. The investor that you're pitching doesn't want to be your customer, right? So in your pitch decks, in your conversations, in your presentations with investors, stop selling the product, right? At some stage in the conversation, not in the first one, in the second or third, an investor may want to dive deeper into the actual product a little bit more to understand it. But for your presentation and for your conversations with investors, for your information that you're providing, sell the opportunity, not the product. Okay, so that's the second one. The third habit of highly ineffective capital raisers is taking a transactional approach to investors. So basically treating investors like almost with disrespect in the way in which you communicate with them, and basically just going from pitch to pitch to pitch to pitch, right? Instead of actually taking a relational approach. And we see this quite often in that now that the space has gotten bigger and there's a lot more sort of inexperienced people that have come in here, or people that have been doing this for some time but haven't quite learned the capital raising process themselves yet, they take this transactional approach, and the subset of that is they think that every investor is a potential opportunity. And that's not just the case, right? Because typically in this space, investors will invest into opportunities in areas which they know, which they've made money in. Typically, they've got sort of specific IP themselves in, they've built over sort of 20, 30, 40 years. And they've got networks in which they can add value by introducing to other investors as well, right? So no, not every investor is a potential investor for your opportunity, right? And so once again, habit number 3 of ineffective capital raisers is to take a transactional approach to investors, right? So just treat them as if they're just a transaction. And the second part today is thinking every investor is a potential investor for your business. Now, the fourth habit, solely focusing on the pitch, right? So going from pitch to pitch to pitch to pitch to pitch, just trying to get your pitch right, rather than actually building a systematic and integrated process for your capital raise. Now, what does a systematic and integrated approach look like? That's going to be covered in the next video, so you'll have to stay tuned for that one, where I cover the highly effective habits of capital raisers. Okay, so number 4 bad habit is solely focusing on the next pitch and just going from pitch to pitch to pitch to pitch, right? Without building a systematic and integrated approach to your actual capital raise. Okay, number 5, act insulted after receiving feedback. You have no idea how many times this is happening. I don't know if it's COVID. I don't know if it's something in the water, but effectively when people are getting feedback or they're getting rejections, they're seeming to act like they're insulted and they're taking it out on others. This is just normal. This is part of the process. As I said, not every investor is going to be your investor. So really what I found is that when people get insulted from feedback, whether it be critical or whatever it may be, or just getting rejections, they're missing out on one of the greatest opportunities in capital raising that is right in front of them that they're not taking advantage of. So that is bad habit number 5, is getting insulted after receiving feedback or after receiving a rejection and then taking it out, either on the investor or on others that you're actually dealing with. Bad habit number 6, right, of ineffective capital raise is acting like you're entitled to raise money, right? So understand that in this space, absolutely no one is entitled to anything. You're not entitled to raise money. The investor that's investing into your business, they're not entitled to actually get a successful outcome. They understand the risks that are coming into this space. It is a high risk, incredibly hard space to operate in, right? It is one of the hardest. So acting like you're entitled to raise money will absolutely go against the entire system, and people that you will come across will realize that that's an amateur approach and it's a naive approach to take to raising capital. And they're very aware of this. You may be able to communicate to others that are basically just a sort of, let's say, new to the process of what you are, right? But understand that acting entitled to raise money is not going to work in your favor in any way, shape, or form. Now, this also aligns with the acting overconfident, right? So you can be absolutely confident in your process, but the way you've got to think about it is you've got to be humble to the process, right? And also you've got to work incredibly hard for the opportunity for someone to want to invest into your business, right? You are absolutely not entitled to raise money. In places like the US, there's a lot more free-flowing capital that goes into companies and people are willing to take a lot more bets. I said, outside the US, you have to work a lot harder to raise the capital which you're seeking for your business. So in summary for this one, none of us are entitled to raise money because of how hard this space is to operate in and how hard it is to create it. We've all got to work incredibly hard for the opportunity that someone wants to invest into our business. I said, if you go outside of, in the US, you see it a lot more freely where people are happy to take punts and happy to take bets. And often they're taking bets of sort of 25 and 50K. It's not uncommon for some of the people you see that are very, very wealthy to be putting in 25 and 50K in supposed bets that they think is interesting to them, right? Or some VC funds taking early bets as well, but they're funds that have got billions in it, right? But outside of that, you have to work incredibly hard for the opportunity to investors to want to invest into your business, right? So once again, none of us are entitled to raise money, and none of us are entitled to be successful at all in this space. We have to work hard for every single inch. The last one, number 7, my favorite habit of highly ineffective capital raises is changing the valuation during the capital raise. See this time and time again. I don't know why you do this. I don't know. And I said, I've never done this myself, right? But what happens is people either, it's almost like the valuation of their business is effectively like their own emotional stock market. So when they're feeling bullish, the valuation goes up. When they're feeling bearish, the valuation goes up. If you want to show that you're inexperienced at raising capital, that is the best way to go about it, is changing the valuation during the actual capital raise. So they are the top 7 habits of highly ineffective capital raises. So I'm going to repeat them all again from 1 through to 7. And I'll put them up on the screen as well, just so they're sort of keeping clear inside your memory. I said, I know I'm guilty of this, and I'm sure you are as well. These are some of the habits you should be cutting out of how you approach it. So first one is being absolutely overconfident. 2, selling the product, not the opportunity. 3, taking a transactional approach to investors rather than a relational approach. 3A to that, the subset of that is thinking that every investor is a potential opportunity. 4 is solely focusing on the next pitch and going from pitch to pitch to pitch and not focusing on a systematic and integrated approach to your capital raise. Number 5 is acting insulted after receiving feedback or after receiving a rejection. Number 6, feeling entitled to raising money. And then number 7 is changing the valuation during the raise. They are the 7 habits of highly ineffective capital raising outlined for you.